Well, good afternoon then, everyone, as we are at the end of another week of trading on Friday the 15th of December. Now, we'll have a flick across markets and a pretty action-packed week. I said I would start with inflation, but inflation didn't really do much for us. I mean, it's over the last couple of years, I mean, to be sat here on a Friday talking about a week in review, to be sat here and said, don't really care about inflation, there's bigger things on the agenda this week. It's something I haven't said in a number of years, but that's where we are today because we have had a raft of central bank decisions out over the course of this week, and some pretty differing central bank decisions out over the course of this week. Now we'll start with the Fed, and we'll have a look towards the Fed as they kick things off on Wednesday evening. Now, if you had a look back to our video on Wednesday, what we looked at on Wednesday was not the interest rate decision. You know, nobody was looking at the interest rate decision, right? What we had to look at was mainly the dot plot, right? The economic projections, but mainly the dot plot. Okay, so they revised, inflation forecast and growth forecast, but that's not what markets were focused on. What markets were focused on was that dot plot and where they see interest rates come next year. Now, they had predicted an extra rate hike on top of what we actually got back in September, right? So the dot plots for this year into year end this year had to be revised down. Now that's not a surprise because we were not going to get a hike today, right? The question was, next year, where do they view interest rates, right? Where they viewed interest rates back in September was us to be one step higher than we are today and then 3 steps lower from that. So the question was, do they keep it 3 steps lower and revise next year's interest rates down by a step, which is by an extra cut, 0.25% or 25 basis points, or do they leave it at the rate that they viewed through to year end back in September and leave it at a 50 basis point cut? So they either left the interest rate the same through to year end next year, or they revised that down lowered as well. What we actually got was them to revise it down lower. Now, he had multiple opportunities to push back on this in the press conference on Wednesday, he being Jerome Powell, but he had multiple opportunities to push back on it, and seemingly said that their job is done in terms of interest rate hikes. Talking about interest rate cuts and the discussion between committee members on interest rate cuts for next year has begun, right? That was a key statement within his press conference, that the conversation between committee members on interest rate cuts for next year has begun. So they've started talking about interest rate cuts. Now then market participants start pricing in cuts across the board. Market participants have now priced in 6 cuts, or are pricing in 6 cuts for next year, which is, maybe that's a bit over the top, maybe it's not. I don't know. The Fed have got a lot of things wrong over the last number of years. Again, they got interest rates wrong through the year end. They made a mess of a lot of things since COVID started. So I don't blame the market for saying we don't really care what you have to say. We're going to do what we think, because the market has been right more often than the Fed has been over the last number of years. They removed QE too late. They started hiking interest rates too late. Arguably, what they did with QE when the pandemic first kicked off was probably too much to begin with. So, they made a number of policy errors, but I don't want to get into that too much on this video. But through to year end, expectations is for 3 cuts from the Fed. That's exactly what the Fed have said. Markets are pricing in 6. 70 something percent chance. I haven't checked it today, but as of yesterday it was 72% chance of a cut as early as March next year. So the big shift in kind of sentiment from the Fed on Wednesday evening. What they've seen over the last 10 days ago on Wednesday, but 10 days before that, Jerome Powell was out saying that not talking about interest rate cuts, saying they still have work to do in order to cool inflation down, and all of a sudden 10 days later they're like, yeah, we're done with hikes. We've now started talking about cuts, and we're going to cut 3 times next year. I mean, what's changed in the 10 days previous to that? I don't really know, but that's where we're at. 3 cuts next year from the Fed, potentially even more if you listen to the markets. You then come around to the Bank of England and the ECB on Thursday. Painted a pretty different picture. You had the Bank of England that said that it is premature to talk about interest rate cuts. They are not going to talk about interest rate cuts. They have kept up the kind of statement saying that interest rates need to stay at a sufficiently restrictive level for long enough. Fed did not keep up that statement. The Fed were going to remove that statement, and they're like, yeah, we're going to cut next year. We're talking about cuts. That process has begun. The process has begun, but the conversation has begun. The Bank of England said that process has not begun. Interest rates have to stay higher for longer, and we've got more work to do. Now, inflation does remain more elevated within the UK than the other two nations. Also, wage growth remains stronger in the UK than the other two nations. So, the Bank of England had a bit more of a reason to be hawkish. So, if you look back to the video on Wednesday, we got the Fed right, we got the Bank of England right. What we didn't get right was the ECB. The ECB was a bit of a surprise yesterday, and a bit of a hawkish stance from the ECB. I mean, like with the Fed on Wednesday, I would have thought I would have given the ECB a bit more of kind of confidence to remain a bit more on the dovish side of things. But ultimately, they've come out and said that, she said in her press conference, I can't remember the exact terminology she used, or the exact what I'm looking for, vocabulary that she tried to use, but said something along the lines of, we have absolutely not started the conversation on cuts. It's not been mentioned. It's not an idea. We've not even considered when we're going to cut interest rates, and interest rates need to remain higher for longer, and they're not going to drop their guard on inflation. They said there's absolutely no need to drop their guard on inflation just yet. They actually expect inflation to pick up slightly over the coming months before then cooling off again. So painting a very different picture. Let's down to more kind of seasonal things with oil prices and gas prices, with the whole sanctions placed on Russia thing. But I'm not going to get into that side of things on this video either. But if inflation is expected to rise again in Europe over the coming months, and the ECB have absolutely not started the discussion on interest rate cuts, and the higher for longer narrative remains, it kind of puts them on a bit of a monetary policy divergence. I mean, they will end up in the same place come 3 months, 6 months time, definitely within a year. So I would say definitely within 6 months. So for now, through to year end and maybe January, February, they are on a slightly different path, the ECB, the Bank of England, to the Fed, which not something I would have thought I would have said on Monday of this week, but certainly 3 months ago. It's not a sentence I thought I would be saying, but that is where we are at. The ECB higher for longer, Bank of England higher for longer, still in play. No discussion of interest rate cuts. The Fed are like, we're done with cuts, we're done with hikes, we're gonna start cutting. It's pretty surprising, to be perfectly honest with you, but that's where we're at. And you can see the movements across markets over the course of this week. Massive upside in your Aussie and your Kiwi post Fed. Well, then you come into euro dollar, right? You got euro dollar. You had one spike higher on Wednesday evening. You had a second spike higher on yesterday afternoon, so Thursday afternoon. Same thing with with cable. Cable popped higher Wednesday evening, also popped higher again Thursday afternoon, and massive moves across euro dollar and cable this week. And obviously that a sentiment from the Fed is the same across the board. You can see dollar Swiss pushing lower, dollar CAD pushing lower, dollar yen pushing lower, dollar index pushing lower. You can see equities like that on Wednesday. They kind of been chopping sideways since then, down and back up, and not really been much clear direction after that. But you can see the S&P like that on Wednesday. So did the Dow Jones, the Nasdaq, the Russell. They all liked it. You can see the DAX like that on Wednesday, but then that reversed all those gains yesterday, and that's kind of just back into its range. So European stocks, UK stocks, kind of back within their ranges. FTSE was trending higher for a while over the last week or two, but finally got out of that kind of directionless price action it's been in for a while, but that's taken a bit of a turn lower post BOE yesterday. Yields, and the natural reaction to that is yields push lower, 10-year lower, 2-year lower. I have had a bit of a pullback, but that's to be expected after you get such a large move. Oil pushing higher, IEA upping their outlook for, or improving their outlook for global oil demand over the course of next year, which is positive for the price of oil. Saudi Arabia, Russia talking about their cuts to production has caused a bit of upside in the price of oil. Certainly across Wednesday and Thursday. Tuesday, massive downside, and you look like it looks like it wants to go lower back again. But back on Tuesday, talking about talking about stockpiles and demand and all that sort of stuff, which has been talked about regularly over these videos since back end of September, and the price of oil. So that's just a bit of a pullback at the moment. Does it cause much in the way of much more upside, or is it just a pullback and then you go lower again? I'd probably say it's more of a chance of this going lower from here on out, personally. Gold moving in line with the US dollar and moving against the US dollar and against yields, which is I'll say with yields, because US dollar is lower. I kind of messed that up a bit, but you get what I mean. US dollar is lower, gold trending with the US dollar. But that's kind of where we're at come the end of this week. Massive central bank decisions, big central bank decisions, and some big news out of the three of them. We did have the S&B as well, which, the S&B, no hike of interest rates. They said there is still a risk to inflation, but interest rates where they are, and disinflation may be a problem in Switzerland next year, but that was relatively muted compared to the others. But yeah, Fed dovish, other two. I'm not going to say hawkish, the other two, but notably more hawkish than the Fed. So that'll be an interesting one into year end. We'll keep an eye on that next week, hopefully into next year. I'm not sure if we will have videos next week. Trading floor closed over the course of today. Actually, trading floor closed today for students. We'll still come up to date with webinars and stuff if you are tuning in. But yeah, if I don't speak to you again on these videos, do have a good Christmas. Do get some rest and relaxation and recharge the batteries for a couple of weeks. We'll still be looking at markets over the course of next week. Might wrap up probably Wednesday of next week on a personal level, but we'll keep up to date what's going on certainly until then anyway. But if I don't speak to you again, have a good Christmas, have a happy new year, recharge the batteries, and we'll be back next year for another year of trading. Thank you.